Oh boy, here we go again. The crypto market just can't seem to catch a break. Tariffs, global tension, and investor panic are all swirling into one chaotic storm, and once again the prices are tumbling. Welcome back to the channel, folks. If you woke up this morning, opened your crypto app, and saw a sea of red, you're definitely not alone. Bitcoin down, Ethereum down, altcoins getting absolutely crushed, and the main culprit this time, you guessed it, tariff chaos. Let's unpack what's really going on here, why it's hitting crypto so hard, and whether this could actually set up one of the biggest buying opportunities of the year. So here's what happened. Over the past few days, global markets have been on edge after new tariff announcements between major economies, most notably the US and China, but also involving parts of Europe. The US just slapped new import tariffs on a range of tech goods and raw materials, aiming to pressure foreign manufacturing sectors. In response, several countries fired back with their own tariff hikes, sparking fears of a full-blown trade war. And as history shows, when global trade gets messy, investors get nervous. Stocks drop, commodities swing wildly, and the riskier assets, like crypto, take the hardest hit. Now you might be wondering, what do tariffs have to do with Bitcoin? It's not like you can slap a tax on decentralized code, right? True, but the connection is psychological and economic. When trade wars heat up, the global economy slows down. Investors retreat to safer assets, cash positions rise, and liquidity dries up across markets. Crypto, being seen as speculative and volatile, is usually the first to feel the pain. Over the last 48 hours, Bitcoin fell below a key support level, triggering a wave of liquidations. More than $500 million worth of leveraged positions were wiped out in a single day, and the domino effect spread across altcoins. Ethereum dipped under $2,400, Solana shed nearly 15%, and smaller coins, well, they're down bad. But here's where things get really interesting. In past tariff-driven sell-offs, crypto has actually rebounded faster than traditional markets once the dust settled. Why? Because while tariffs hurt trade and manufacturing, they also tend to push central banks toward looser monetary policy. When economies slow down, interest rate cuts follow. And when rates fall, risk assets like crypto usually start to shine again. So while this crash looks brutal on the surface, some analysts are quietly saying it might just be setting the stage for a major rebound, possibly within weeks. Let's look at the data for a second. Over the past year, Bitcoin's correlation with global equities has been gradually decreasing, especially after the last halving. That means the crypto market is slowly decoupling from Wall Street behavior. Yet in times of panic, that correlation always spikes temporarily, and that's exactly what we're seeing now. It's not that crypto fundamentals have changed overnight. The networks are running just fine. Transactions are happening, development continues, adoption is growing. This sell-off is mostly fear triggered by macroeconomic uncertainty. And fear, as we know, often creates opportunity. Speaking of opportunity, look at the on-chain data. Despite the price drop, the number of wallets holding Bitcoin long-term has actually increased. Accumulation addresses, wallets that haven't moved their BTC in months, are climbing again. That's usually a bullish signal. Big players, or what we call whales, seem to be using this chaos to scoop up more Bitcoin at discounted prices. We've seen this movie before. Retail investors panic sell at the bottom, institutions quietly accumulate, and a few months later, everyone wonders why they didn't buy when prices were low. Now, let's talk sentiment. Right now, the crypto fear and greed index has plunged deep into fear territory, one of its lowest readings of the year. Historically, those are the moments that long-term investors dream about. When everyone else is panicking, that's often when the biggest gains are made. Of course, this doesn't mean you should rush in blindly. Volatility is still off the charts, and macro conditions remain unstable. But if you believe in the long-term fundamentals of crypto, decentralized finance, blockchain innovation, and digital asset adoption, these are the times that test conviction. Meanwhile, altcoins are facing an even tougher road. Layer 1 projects like Solana, Avalanche, and Cardano have all seen double-digit drops, partly due to liquidity drying up. Yet, interestingly, developer activity on these chains hasn't slowed. The teams are still building, new apps are still launching, and user bases are holding steady. It's almost ironic. While market prices are falling, the underlying ecosystems are quietly getting stronger. The disconnect between price action and innovation is wider than ever. Let's zoom out for a moment. The crypto market has survived worse than this. Regulatory crackdowns, exchange collapses, even outright bans in some countries. Tariffs, they're just another chapter in the long saga of global economic friction. In the end, the core value of crypto, being borderless, censorship-resistant, and independent of traditional finance, becomes even more appealing when the world is tangled in trade disputes. Every time global politics make the system look shaky, crypto's argument for existing gets stronger. Still, in the short term, we can't ignore the technicals. Bitcoin's next support zone sits around $54,000, and if that breaks, we could see a dip toward $50K before strong buyers step in. On the upside, reclaiming the $58K level could quickly restore confidence and trigger a relief rally. Ethereum has similar levels around $2,400 and $2,600. Traders are watching closely to see if bulls defend those areas. Expect some choppy sideways action before any real trend emerges. Now here's a thought to leave you with. Every major market crash in crypto history has looked terrifying while it was happening. But when you look back months later, it often turned out to be the best entry point. The 2018 bear market, the COVID crash of 2020, the FTX collapse, all of them were followed by massive rallies once confidence returned. Could this tariff chaos be another one of those moments? Time will tell, but one thing is for sure, smart investors are paying attention. So if you're feeling the fear right now, take a breath. Zoom out. Remind yourself why you got into crypto in the first place. The technology hasn't changed. The mission of decentralization hasn't changed. It's just another storm in a long journey, and storms always pass. What matters is staying informed, keeping perspective, and making decisions based on data, not emotion. Alright, that's the latest on the tariff chaos shaking up the crypto markets. If you found this breakdown helpful, don't forget to hit that like button. It really helps the channel grow and keeps us motivated to bring you daily updates. Subscribe if you haven't already, because the next few weeks are going to be wild, and you'll want to stay ahead of the curve. Thanks for watching, stay sharp out there, and as always, I'll see you in the next one.